Donkey. You know what's weird? It showed me a like before it showed me a viewer. Um, yeah, I don't know. My internet cut out. It was a Wi-Fi thing. It happens. Just give people a few minutes to pile in here. My apologies. Frank, are you in here? Is Frank in here? Frank Henkinson? Yeah, bro. Trading Donkey. I'm live streaming over Wi-Fi. All of my data comes in through Wi-Fi. There's a lot on our Wi-Fi here. I mean, I have like the highest speed internet you can get, but it's a lot. Alex, yeah. Yeah, let's jump over to NQ, see what that guy's doing. For those of you starting to pile in, my apologies. My Wi-Fi cut out. Lost the last live stream. If that ever happens in the future, just wait a couple minutes and come back and I'll have refreshed and started a new one. Okay, so the NQ here is also trending down. It is one time framing lower. It's completely below yesterday's range, which is more bearish than. We're completely below yesterday's range, same as the ES. But interestingly enough, so this day, this massive sell-off day that we had in the ES, we're above those levels now, or we're just trading into them, right? Most of the volume was down here, whereas on the NQ, you already rotated down to the lower end of that. So that could be the explanation for why it's not as weak here at the lows, because it already has the support from the rotation down on the 4th. I mean, you can literally look, where is the buying happening? Right where the two-sided trade took place on the 4th, right? So to me, if I was trading the NQ, I'd get really scared if we broke below the low at, I suppose I'd only be scared if I was long. 13,382. Okay. Okay, we're rotating back up above the base of that spike. Did we find support? Ticks are starting to peek their way back up into above the zero line. Not good taper at the low. Increasing the odds the market needs to come back down here and do some more trade. No, taper refers to like going from a larger number to a smaller number. So you can visually see it in the candlesticks, right? You can just tell it's not good taper because there's like a big fat candlestick right here. That's the second from the low, and then there's a skinnier one above it. So you can visually see that it's not good taper there. I think the high of the day had good taper. So that's okay. It's better taper. You see how it kind of just like slowly fades off? Let me find some good taper as an example. Here you go. This overnight taper is perfect. See, so you got your fattest node here, and then it just gets thinner and thinner and thinner as it goes down. That is good taper. You can also see it in the numbers, right? If you look at the numbers, there's 800 contracts here, only 300 right above it. So probably the market needs to come down and put in at least 1,000 above it. You know what I mean? That's what creates good taper. Speaking of which, here we are, testing those lows. So Kathy, the internals is over the zero line bearish and under the zero line bullish above, bearish below. Basically, yeah. I mean, there's multiple things I look at. I'm looking at the trend. I'm looking at the way that it's moving, right? But the most basic, simple way of looking at them is above zero line bullish, below zero line bearish. Yeah. But like this was still bearish here because it was just going, it had opened above the zero line, but it was going straight down. You know what I mean? So two different ways to look at it. Jamie, what is two-sided trade? What is two-sided trade? So the idea is what's going on with the markets is a constant two-way auction process. Okay? So like an art auction where the auctioneer says, I'm selling this painting. Do I get 1,000? Somebody raises the paddle. Do I hear 1,100? Somebody raises the paddle. 1,200, right? That's a one-way auction process. The auction can only go up. It starts going down if nobody bids on the first bid up. But then once the first bidder enters, then it just goes up. There's only one direction that can go. So imagine what's happening with stocks or with, the ES or any financial market is it's like there's a painting being auctioned, but instead of there being one painting, there's like millions of paintings, right? There's all the shares that are available. There's all the futures contracts that are out there, whatever the case may be. So the trade isn't just one direction. The price doesn't just go up. It can go both ways, right? So the bidder, do I hear $1,000? Do I hear $1,000? I have 1,000. Do I hear 1,100? 1,100. I hear 1,100. Do I hear 1,200? Okay, well, if there's nobody that's willing to pay 1,200, the auctioneer brings the price back down. Nobody at 1,200. Do I hear 11? If nobody bids at 11, even though somebody just bought at 11 a minute ago, because there's a new share that's available, the price can keep going down. So, a place where two-sided trade takes place is essentially where, half the people think the market's going to go up, so they're buying, and half the people think the market is going to go down, so they're selling. And then they compete with each other, right? They fight over whether they're right or wrong, and then whoever ended up being right makes the money, makes the profit on the move out of it. So all these areas where you see random nodes of volume, that's where two-sided trade was taking place. I don't know if it'll be a full-on correction, but as I mentioned this morning, you got to look at that 20 moving average on the SPX, right? On the daily, let me just pull that up real quick. Okay, so if you look back historically, when we break through the 20 moving average, right? We used to break through, immediately pull back up and continue higher. That happened a bunch of times here, right? But then in January of this year, that trend changed. And when we broke through the 20 moving average, we pulled back above the next day, but then rotated down to the 50. Okay. The next time it happened, the same thing happened. We broke through, went down to the 50, rotated back up again, went down to the 50 again, rotated back up again, and then broke through the 50. So this just shows us from here, from these times where the market immediately pulled back above its 20, the trend is starting to get weaker, right? It's needing more and more support. So then the next time it broke through, it had to find this old support in these trend lines. In these support resistance lines, okay? So then we did it again here, right? We broke through the 20. Immediately, the 50 happened to be right there, but we needed to hit that 50 to find support. So we did it 2 days ago. We broke through the 20, but in that same day, we pulled above. So that doesn't actually count as a breakthrough. Then we were supported yesterday on that 20, but now we're clearly breaking through it, right? So if we're just looking at history, it seems like now we're going to need to come down and find better support to the downside. So I don't know if this is, how much of a air quotes correction this will be. But yeah, I think at least to this trend line, which would bring us at about 41.28, right? Or the 50 moving average. I think we need to come visit one of these to get another one of these bounces, right? Let's see what happens. Man, I can't believe we've only had an hour of trade so far today. But here we are, 4 minutes from the C period printing. And when the C period prints, we can just monitor for one time framing from that point on, right? If you're short, you just keep watching, can the C period get above the B period? If not, can the D get above the C, and so on and so forth. And as long as it continues to one time frame lower, the price will continue to push lower. Okay, so we got these single prints that we left behind here in the B period. Okay, and those often need to be backfilled, right? The market has to work its way back up and fill those in. So if today, I was just looking at it and I was thinking, because it's above the base of the spike, which to me should become resistance now, the C period might not be able to get its way up there. If it can't, that would be a very potent signal. So we're not there yet. The market could still come and fill those like normal and everything is fine. But if they're left behind, it'll be a good lesson that we can talk about later in the day. Gotta love it when the second I start talking about something, the market does the opposite. There it goes. Okay, well, it is going to fill those single prints. So for the trend, the downtrend to remain intact, the C period high, now there's one single print left. The C period high has to stay below the B period high. If it gets 2 ticks above, basically gets up to our halfback here at 41.5375, then that will be the cessation of one time framing, okay, leading to likely rotation. We just pulled the POC lower. The POC is below the halfback. Both of those are bearish. And we continue to one time frame. We also just filled those single prints, which took away the weak reference above. Yeah, Kevin, I don't know what you're referring to for the little red dot. But if you were able to set up something similar to Market Profile in Thinkorswim, that's cool. I assume it was monkey bars. Is that what you used? That's the advancers versus decliners, specifically looking at, oh, there's the cessation of one time framing. Motherfucker, they're doing it to us again. Ugh, this market just been nonstop. This is like a millionth time in a row where we have a huge push in the first hour of the day and then we just go rotational the rest of the day. They did it to us here. They did it to us here. They did it to us again. Okay, well, now the market is rotational. Still left those weak references behind. We got a low, could be a good low in terms of excess, but the taper is not amazing. Okay, so now we're looking for resistance above the POC for a rotation back down, as always, right? Could come in this little node of volume from yesterday, somewhere in here, it finds resistance. Could be the POC from overnight, the prominent POC. Could be the 20 moving average when the market gets its way back up here to this 20 moving average. But expect the market to rotate. Okay, yeah, so ASPD, that stands for the advancers versus decliners on just the S&P 500 stocks. So it's measuring how many people are buying versus how many people are selling. Or how many people are buying the ones that are going up as opposed to how many people are selling the ones that are going down. Correct me in the chat if I explained that wrong. Is Frank with us right now? Frank Hankern? Sorry. Henkinson? Frank Henkinson? Are you with us, my friend? Pop up in the chat and let me know you're here. Frank sent me some crypto, sent me some BTC about an hour ago, and I just wanted to say thank you. I did notice it before the previous stream cut out. So if you're here, appreciate you, brother. Ah, there he is. Frank from Norway sent me the BTC. Thank you, brother. Yeah, basically same day as yesterday. I mean, that's what the market behavior. I mean, it's literally like it was the A period, B period had this crazy push down, C period blew right back up to get the cessation, and then we just rotated. So, yep, replay of yesterday. Kathy, I don't trade that way. I don't trade as a science where I have specific things I always do every time. I trade based on sort of just my feeling. So if I'm getting in a trade and I think I it might work, I don't have a ton of confidence in it. Like I didn't do this, but if I had to try to like short the C period high or something like that, I would do it with just like 1 or 2 contracts on the MES. And then if I had like a ton of confidence, like earlier today when I saw us break the spike, the base of the spike, I went short on like the ES, right? Because I had a lot more confidence in that short. So I choose whether to trade the MES or the ES based on how much confidence, and then size as well, how much size I step, whether it's like 2 contracts or 6. I also normally like I only go in for 1 or 2 contracts at a time, and then I kind of like ladder in. I build positions, but then I put my stops where the reason I get in makes it wrong, right? So I would put, so for example, if I went short, down here during the C period, I would have put my stop 2 ticks above the B period high, because I would know if the market got to that level, I'm wrong. And the trend down is not going to continue, right? So I don't put them based on any specific number of ticks or any specific distance. It's all based off of visual references and where my trade idea will be wrong. The idea is I want to stay in the trade as long as the trade is still right. Even if it's going against me a little bit, that's okay, as long as the idea is still right. Stanley in the house. Good to see you, brother. Welcome. Yeah, Phoenix. I'm now trading my rotational plan, which is to sell above value and buy below. Single prints that are on the outside of the range, single prints that are at the high or the low, they are okay. They don't need to be backfilled at all. They are a sign of excess. They are a sign that the market had a good 2-way auction process. It pushed as high as it could, and then it pulled back down. So it's actually good to have taper on the high. Good to have single prints on the highs and the lows, especially on a rotational day, right? That's what you want to see. It's when you have the single prints inside the range, like earlier today, when the C period printed down here, we had all those single prints in the B. That's what you don't want. You don't want it inside the range. Those will get repaired. Okay, I just posted a link to the Discord in the chat. And thank you, Carlos. No, I'm not a teacher by profession, but I think good. So thank you. Okay, so the market is rotating, okay, as expected, but it does still have very weak internals. So that makes me less confident going long when we get below value here. So I'll just need to make sure we find good support before I enter the trade long for the rotation back up to the POC. We still have this little random node of volume right here around 44 that needs some backfilling. And then the taper on the low isn't great. So we'll see what happens. Do we start to backfill this and it becomes support for the rotation back? Do we need to come down here, push a little lower, get some good taper, and then the rotation back up? Pretty much anywhere inside of yesterday's value, or I'm sorry, is this 2 days ago? Yeah, 2 days ago's value. Pretty much anywhere in here we could find support. But if we start to break down back past this POC, I do still see this as needing to get repaired, the first of the weak references. So that could be where the market finds support. It comes down here, gets a couple ticks excess, and then it starts its rotation up. So that's basically what I'm watching. Where does the market find support for the rotation back to the POC? Philip M., good to see you, brother. No, we're not, Alex, we're not one time framing now. Now the market is rotational. Okay. Man, this is always so hard for me to try to explain. There is still one time framing that happens within an intraday, right? You can have a balance. You have a trend down, gets the cessation of one time framing, and then it pushes up higher, and then it just trends down the rest of the day. That does happen, okay? In which case, yes, this would be the beginning of one time framing lower again. However, that happens very, very rarely. Normally, once you get the cessation of one time framing, especially early in the day, like the C period, you just get rotation, okay? So yes, that's possible, but I'm not looking at that. I would start to pay attention to that if the market started to break to lower prices. If we got down here to the week I&J lows at 41.35, right? And then kept selling off and kept selling, then I'd be like, okay, it looks like we're one time framing lower. We have a new trend. There's a new pattern happening. But right now, the mood that the market is in, the psychology of what's happening, is the psychology of balance, is the psychology of rotation, right? A trend is created when most of participants believe the market's going to go down. That's when it trends down. But now that's over. We found out in the C period that more people do not believe it's going to go down. There are now enough people that believe the market's going to go up that we need to rotate. We need to have two-sided trade here. And then somebody needs to win and break out of this rotation. Okay, D period low is weak here, increasing the odds that it will need to be revisited. Now, good taper is just, it's not about the specific numbers. It's just about the way they work their way down, right? I mean, this is actually pretty decent taper. I just don't like the 300 contracts. It's got 900 above it, 600 below it, and only 300 here. But this is actually, now that I'm looking at it, this is pretty decent taper. But yeah, I don't like less than 100 contracts. But it's a very nuanced thing. I just notice it, but it doesn't usually affect my opinion. But yeah, I like to see over 100 contracts on all of them, and I just like to see the numbers going down steadily. Yeah, Kathy, one time framing means a trend. The cessation of one time framing, the end of it, means rotation. Okay, so that's the rotation back to the POC. So now we got a weak reference below at the bottom of the value area that needs to be repaired. And we've got the 20 moving average above the value area over here that could work as resistance. So we're just waiting to see which one the market gets to first. Internals starting to improve a little bit here. Still looking very rotational. So I am looking for resistance to trade back down to the POC. Could be from the 20 moving average here. Could be from the prominent POC in the overnight. Let's see where it happens. Yeah, Kathy, resistance level just means a place where there are sellers waiting to do business, right? Okay, so we're pushing through that 20 moving average and pushing through that prominent POC. That is slightly bullish. Okay, internals heading their way up towards recovering here. Still looking for resistance above for the rotation back down. just slightly bullish, Jitten. What you guys will learn about me is I'm constantly building a narrative in my mind of what the market's trying to do and how good of a job it is of doing it. So when I say something like, we pushed through that, that's slightly bullish, that's just me kind of adding a thought to my narrative. Okay, created a weak E period high here in the E period. So market is rotational. We've got a weak reference above and a weak reference below. Oh, okay, that's repaired. Okay, so we created a poor high here in the E period. A poor high is when you have a weak reference that's at the high of the day. So this E period high is weak because it is one tick from the A period high. Okay, so that makes this a poor high. Poor highs increase the odds the market will come back and repair them, but you often first get a push away. This is obviously the push away here, back down to the low of the E period. So the question is, how much of a push away do you get? If you just get something like this and then it instantly comes right back, that would be very bullish. Whereas if it pushes its way all the way back down into value, it's probably just further rotation. No, I don't look at previous value area, high or lows, as support or resistance in the market. There are traders that do that. I don't particularly find it to be that common. I more look at value just how it relates to each other. But now the halfback that was just below, the halfback from yesterday, which was just a tick below where we made that high, that is good resistance. Okay, so that's the repair of the poor high, which happened very quickly, and we didn't get much of a pullback, so that is also slightly bullish. We could be getting a trend up at this point, which would have started at the low of the day, which is exactly what happened yesterday. Or I'm sorry, 2 days ago. So yesterday, sold off A to B period, rotated up, got the cessation of one time framing in the D, pushed up D and E period, made a new high, and then rotated back down. Did a little two-sided trade, and then rotated back down to the lows. So something like that is not impossible here today as well. We are seeing a trend higher in the ticks, both indices. Obviously, the advancers versus decliners poking their way back above the zero line, getting bullish here. So what I'm waiting for now is the rotation back down from here, right? I can't go long here, even if we are starting a trend higher. I can't go long here because of the location of it. I need a pullback. So, okay, well, where am I going to get my pullback? Where do I find the support to enter a long trade? It would be right here on the 20 moving average. So when the market pulls its way back down, gets to around the highs of the value area, okay, it finds support. If not, it's a short for the rotation back to value. Back to the POC. You got thin volume in here. This will need to be backfilled. 200 contracts at the A period high. I know. I was just going to comment, Rocket, on your 63 holds to 75 comment because 63 did hold. I mean, it went a few ticks below, but or no, it held right on 63. So I was about to be like, bro, you're about to crush the game with that call. Okay, so we're bringing in buyers. Got past the POC from yesterday, also a little bit bullish. So in my opinion, if you're thinking about going long here for a push higher, I wouldn't do it. You got all this thin volume down here. Better to wait for the push higher and then catch the rotation back down. Or wait for the pull back and then find support and go for the long there. Oh, sorry about that. Okay, so like a liquidation break to the downside, this feels like a short covering rally to the upside, right? This is all the people that got themselves overly short this morning. Maybe some of these weak hands sellers in the D period that tried to get further continuation to the downside, they're now getting squeezed out of their trade. So I do think wherever this finds resistance, it'll rotate right back down very quickly. Once again, just want to urge people not to FOMO here. This is a short covering rally, and it will retrace very quickly whenever it stops going up. So there's no way to know where it's going to stop because it's based out of emotion, right? It's fear that's driving this, the fear of all the people who went short and are scared that they're going to lose money. So this could keep going however far it needs to go, but very dangerous to try to go long into this because at any moment it could just boom, pop right back down. Don't you go FOMO. Don't you do it. Yeah, 3 cheers for Rocket, who fucking crushed it with that call. I mean, to the tick. But okay, it's starting to feel like they're running out of buyers here, or sellers that need to exit their trade. Okay, the trend in the ticks is remaining intact. I would expect that we'll see a tick that's a big red or big red candle to the downside that breaks this trend. Kind of like this one, although it doesn't count because it was just a wick. But you get the big body candle that breaks down through this trend. That's when the pullback begins. As long as the trend remains, the market will probably continue to push higher. But just keep in mind, it's emotional here. It's short covering and it's FOMO buying. That's who's doing business here. We're way above value, way above the POC on a rotational day. Here comes the FOMO. Josie, yeah, it can keep squeezing. It can keep squeezing for a shocking amount of time. I just believe that it's irrational. And so I don't want to trade into irrationality with them. I want to go opposite irrationality. Okay, so there's the beginning of the sell-off. Okay, so they're trying to get some two-sided trade here. They're starting to bring in some volume at these higher levels. Can they create some support, or will the market rotate back down? We got these thin nodes of volume here around 72, around 68, 66. All of this needs to be backfilled. Okay, it is a good high in terms of taper and excess. Or I'm sorry, in terms of excess. Taper's not amazing. So excess refers to the number of letters, the number of TPOs. So you need 2 to be good excess. This is like 50. This is like very, 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 very good excess. Yeah, so you only need 2 of these letters to be good excess on a high. We have 5,000 here. So that's good excess, but the taper isn't great because we've got 1,700 contracts and then 200 and then 800, right? I'd like to see that just level its way down. So the fact that we had a short covering rally that pushed us up to these levels doesn't mean we can't trade up here today. It just means the market needs to find support first. It needs to pull back. You see this level here at 72.50 with 85 contracts. Got to put some more contracts in there. Got to come down here, 200 contracts, put some more contracts in there. Then it finds support. Then when you push back up into these levels the next time, it's a good, it's stronger. It has more support behind it. Seriously, Jan? That's awesome that you're making flashcards of all the crazy shit I say. Okay, so now with the printing of the F period here, we've left behind all these single prints in the E period. So this is a great example we talked about earlier, the difference between single prints that are at the high of the day and single prints that are inside the range, right? The high of the day, these we can leave behind, but these likely need to be backfilled. If for whatever reason they don't, let's say the market just cannot come back and fill any of these and we just trade higher for the rest of the day, well, then we'll know in this range, in this period, something changed in the market. We don't know what it is yet, but something fundamentally changed here, which made the market more valuable, and so the prices are pushing higher. So it's a great nuance, but you don't know really until the end of the day if it's still left behind. In the meantime, because statistically it almost always backfills, I will assume we're going to backfill down to the A period high here at 41.67. Yeah, Jan, it would be great if you could share those actually with the community. Did you click the link earlier to get on the Discord? It would be really awesome if you went onto the Discord. There's a section on there for like educational content, and just take pictures of it and post it on there. That would be really awesome. But you don't have to. Yeah, I'll post that Discord link once more. Okay, so I just posted that link in the comments. And basically what you do is you just click on that link. If you don't have Discord, you'll figure it out. It's very simple. It's basically like a chat service. And then once you get inside, this is what the Pirate Traders area looks like. If you just click on this tab right here that says Education, you can just go in and post, right? You can add, and then you just add your pictures right in there. and they'll post right on up. That would be awesome. Okay, so we're starting to build some volume here, starting to bring in some new buyers at these levels. Okay, the trend is still holding in the internals here. This is what I was talking about. You need that big red candle that just breaks down and totally breaks the trend very clearly. That's when you get the major pullback. Until then, we could just be building up support for another push higher. Thank you, Phoenix. I'll check those out one day. No, I'll try to get to it this weekend. Rob Farley, full of good ideas today, my friend. Oh, yeah, we're only at 40 likes. Guys, please smash that like button. Support the stream. Smash the like. Make it right. Smash the like. It's fun. It's free. It's a social obligation. Yeah, the POC is down here, way down here at 41.53. That is the POC. Value area high is over here at 41.66. So once again, as the market makes its way back down to try to fill these single prints, okay, backfill some of these low nodes of volume here, the thing that we're looking at is support. Do buyers step in at this level, just at the high above value here? Do they step in and buy this up? If so, it could, continue the breakout, the trend higher. If it rotates back into the value area, back into this blue square, it increases the odds that it will come down to half back or even to the POC. Okay. Yeah, Kathy, halfback is just 50% of the day's range. So it's this white line that's right here. And it's just halfway between whatever the high and the low is of that day's range. And it's very common that it becomes support on a pullback or resistance on a push higher. Think about it like the Fibonacci, the 50% retracement. Kevin, to be totally honest with you, I don't think about stuff like that, about the sell in May or whatever, those type of concepts. I'm a short-term trader, so it doesn't matter to me what's happening in the market over a longer-term basis. I'm just focused on what's happening day by day, hour by hour. And so those larger macro conceptual ideas don't actually really affect my trading that much. By which I mean, if the market is bearish, I don't need to know why it's bearish. I don't need to know if it's because of a certain time of year or a piece of news or whatever. It doesn't matter why the market is bearish. I'll see in the chart that the market is bearish and then go short, and vice versa. Okay, so they are finding support in here, right in the POC of yesterday. So this is one of those random nuances that's really great for a learning thing, is that if at the end of the day we haven't filled these single prints, okay, it will make them very strong support if the market rotates higher and then pulls back down to here, because this will indicate a change in the market. Something happened in here that made the market more valuable than it was earlier this morning when we were doing business down here. I'm not saying that that's going to be the case. We won't know until the end of the day. But if it is, it's an important nuance. One of the ways that we use single prints, if they remain, is that we treat them as if it's a whole new day. So essentially, no, I'm not going to color that. Essentially, you would pretend that we're now, like this was one day, okay? And it was just a giant V shape, boom, boom. And now we're in a new day. What is the new day doing? The new day pushed higher and now it's rotating. All right, that's kind of the way you think about single prints that are left behind inside the day. Is it's the second distribution becomes a whole new day. I'm sure that just confuses shit out of you guys. Don't worry about it. It'll make more sense later. It'll be easier to explain at the end of the day. Okay, I'm going to switch myself to a bullish stance here, and I will explain why. Because in a when what should happen scenario, if this was a short covering rally, we should have gotten an immediate fall back down to the base of the single prints. That's not what happened. We pulled back down, and then we started a new set of two-sided trade. We started bringing in new buyers here. And the fact that they came this close to filling the single prints and they didn't is an indication to me that they're correct, that the buyers that are stepping in here are right, and that this may now be the fair price to do business. So I'm going to change my stance to bullish, but I'm still keeping an eye on this trend in the ticks. The second we get that big red tick that breaks the trend higher, that's when I change my stance from bullish. But as long as it maintains this trend, I think it could continue. And I think the fact that we haven't had the bigger pullback is going to start to change other people's minds. They're going to start to get bullish, and then price will start moving higher again. Could be wrong. I'm front running this a little bit, but I think I'm right. If I was going to go long here, I would put my stop either just below the, like even just one tick below this F period low, right? Because if the market pushes its way back down, it might be trying to fill those single prints again. So I'd want to exit the trade there. Or I'd put it below the base of the single prints so that if it pulls down, we see if it finds support in here. And then if it doesn't, that's when my stop fills. Just depends how much you're willing to risk and how confident you are in the trade. Jitten, are you asking about the single prints above acting as resistance? No, they will not. Not at all. Case in point. Oh, if you're just saying the two random levels that have those white marks, no, just ignore that. That's just showing you how much where the volume is traded within the 30-minute period. That doesn't matter. I don't look at the color of the letters at all. As a matter of fact, one time after discussing it with somebody on the channel here, where they just couldn't understand why I leave those colors, even though I don't look at it at all. I'm only looking at the colors for the volume over here on the left. So the next day I switched it to just the letters being just all white, and I hated it because my brain had just become so used to seeing it look like this. It like confused me. But yeah, I don't pay attention to the color inside the letters, only on the volume. Okay, so same as the last time we created the poor high. If you recall what I said, once you create the poor high, you often get a push away from the poor high, and that can be telling. If the push barely goes anywhere and then comes right back to repair it, that is a little more bullish. Whereas if it rotates all the way back down, it's not necessarily bearish, it's just not as bullish. But the poor high is always bullish in the fact that the market almost always comes back and repairs it. Can it get through 80 to go to 90? 100%. Oh, yeah. So the next major resistance, once we get through the 5-3 low, which was the top of the gap, once we get through that, the next major resistance is the base of the spike from 5-3. That was a spike down at the end of the day. And then above that, the POC, which is at 41.90. So you got two little pieces of resistance you got to work through there. Oh, no! Dun, 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 dun. Right? All day. I've been talking about this tick that would break the trend. Of course, this could just be a wick. It pulls right back up, but we may be ready to start pulling back here. This poor high might bring in the sellers. Yes, sir. Back to neutral. And there they go. So this is what I was talking about. When you get that poor high, you often get a push away. This harsh, rapid push away is a little bit less bullish. It's not bearish, but it's just less bullish. So now, once again, we're looking for the market to find support somewhere above the base of the single prints. We have just pulled the value area higher as well. The value area was below the single prints, so it's now getting pulled higher. It is no longer below yesterday's value. It is now overlapping to lower, which is neutral to bearish instead of just straight bearish. Okay. Yep, the ticks, we have clearly broken that trend that we had with the higher lows working their way up. The other internals also pulled themselves back down. So both the breadth and the advanced reverse decliners are now back below the zero line. It's just a sign of rotation, right? So balance leads to excess, excess leads to balance. This crazy big green, these two candles, the D and E period push higher, that is excess. And now the market has pushed as far as it's going to push, and it needs to balance off that excess. Okay. Normally, I would expect a rotation back down to the POC, but since we left these single prints behind, I'm more expecting that we get rotation above this single print area. So we rotate around here and start to bring in volume, which, by the way, is what we did yesterday. Same bat time, same bat channel. Design knob, I think that was just short covering, right? The market got itself overly short here in the morning. Let's zoom out here. So we opened, okay, and we were inside this range where we've done tons of trading. And then the market just sold and sold and sold straight down all morning. Look at the pullback in the B period. Nothing. Just a few bucks. Continued to sell straight down. Market just got itself overly short. Particularly probably in this little node down here. Right? There were so many people piling on the shorts here that then when they didn't get anything for it, when they got this weak reference, right, they couldn't even get below the C period. And the D period started to sell its way back up. They started to panic. The people that went short in here started to panic. Their panic led to more people panicking. Their panic brought in buyers who started to FOMO in. So then they keep pushing. And then more people panic out. And then more FOMO buyers. And this, I'm not kidding. This is all emotion. The sellers who are covering their shorts and the buyers, it's all just emotion. One is freaking out with fear and the other is freaking out with greed. They don't want to miss their chance to make all this money, so they keep piling on and piling on and piling on. Right? Then we got up here in the E period, finally ran out of buyers, and then the market pulled right back down in the F. But because it found support so high, that brought in the new buyers. And so now we're having two-sided trade. Okay? So the big E period push up was just to liquidate that old short business from down here earlier in the day who were wrong, right? The people who went short in here were just wrong today. And so that's the price they had to pay. Thank you, market. One more lesson. Moving on. James, I don't have anything that explains it. I can walk you through it quickly now, just to give you a basic idea. So the letters, those represent time periods. Each one represents a 30-minute time period. You can think about it a lot like a candlestick, basically, but just with letters. The numbers over here and the little candlesticks that run horizontal, these are the volume. So it's the volume being shown at each level. Okay. As far as the colors are concerned, the profiles that you see that have the sort of pinkish, reddish coloring, that is the regular trading hours. So that's when the market is open in the US. And then the bluish colors, that is the overnight trade. So that's after the market closes in the US until it opens the next day. So that's how the profiles are split up. So like this is last night. This is yesterday. This is the night before last. Okay. As far as the colors are concerned on the volume over here on the left side of the profile, the dark red is where the most volume is traded. The pink is the medium, and then the white is the least. This blue shaded in box here that you see, that is the value area. The value area basically represents where 70% of the day's trade took place. This little green dot that you see here, that is the opening price of the day. And then when you see the green triangle, that is the closing price. So for example, the overnight market yesterday started here, ended here. The halfback, this white line that runs through here, that is 50% between the high and the low of the day. Yeah, I think that about covers it. Oh boy, look at that. They're playing tricks on us, guys. They wicked it right back up with those ticks. Still, to me, seems like rotation up here at these prices. Well, design up. I wouldn't call yourself a dumbass for adding to shorts in that short covering rally. Um, it was a perfectly logical trade. I just would have waited until, I mean, I quite literally did just wait until it was done, right? You don't short it as it's pushing higher. That's the same thing as trying to catch a falling knife on a liquidation. You instead wait for it to top out and then start to pull back down. So you're not trying to grab the top, couple bucks up in here. You're not trying to short that. You're waiting till it goes up there, it's done going up, and then you short it on the way back down. That's the better way to short a short covering rally. But the instinct to short it was excellent, was very good. It was irrational. It was emotional. They just got lucky. They stayed up here long enough to bring in buyers. Cine Matt, happy to have you, brother. Welcome. Donkey. Yeah. Yeah, Cine Matt. I might lose you when I break out in song. You've been warned ahead of time. Yes, the value area has pulled up. Earlier today, when we created these single prints, it was below this level. It was like down here. So it has gotten pulled higher. And it will continue to throughout the day, right? If we keep building volume up at these levels, eventually at some point today, the value area will pull up here. It'll be a very large one like yesterday's. I mean, like the last few days, to be honest with you. These have all been very large ranges. So it'll be like this. It'll be a very large range that takes up a big chunk of the day. And then eventually we'll pull the POC up into this area up here. But we just need to spend some more time, put in some more volume. Jitten, I'm not sure. I don't understand your first question. If you could try to phrase that differently. What is that indicator of besides a widening of the range? Yeah, I'm confused by that. But as far as whether I'm seeing anything overtly bullish or bearish at the moment, nothing that jumps out at me. I am impressed by the ticks here in the NYSE, the way that they were able to just instantly pull right back up. That was a little bit bullish to me. But I think the market, like I said, just needs to put in some volume here and then eventually take another stab at repairing the poor high. And then we'll see if we can get a breakout or if we just have further balance. Up to 50 likes at the moment. If you feel like you're getting any value from this, please smash that thumbs up button. Really helps the channel, and I appreciate it. Ah, okay, yeah. There you go. So the value area moving higher, is it bullish or bearish? It's bullish, right? So you think about the way that Jim Dalton talks about it, okay, which I just love. I think it's such an easy way to understand the way an auction process works, is that so like price is just an advertising mechanism, right? Where the price currently is, it's currently at 41.75, okay? Where the price currently is doesn't mean anything. It it could be overbought, the price could be too high. It could be oversold, the price could be too low. So you can't trust just the price alone to be an indicator of what future prices will be. You can't trust it. It's just a trick. It's just an advertising mechanism, right? Like the clothing store orders too many jackets and they got to get rid of some of their inventory, so they do a 25% off sale. So, you go in and buy the jacket at 25% off or whatever like that. Then they lower their inventory. So then they bring the price right back up to full price. It's the same conceptual idea that's happening in the market here, is that when the market gets overly long and prices push their way all the way up here, it's like the opposite of a sale. It's a way to bring in sellers, right? It's a way to make them enticed to do business. So you get price overly long and then you entice those sellers to come in and sell. And then same thing on the downside, right? You discount the market enough, you make it cheap enough that then buyers want to come in. They want that 25% off sale. They want that 50% off sale. They love to buy. People will buy things in the real world that they don't want or need just because it's 50% off. Like, just because it's such a good deal, they can't let the deal pass them by. They'll go do business. They'll go buy that product, right? So as a trader, we always want to be kind of doing the opposite of that, right? If the prices are extra high to bring in sellers, we want to be a seller. We don't want to be a buyer at those high prices, and vice versa. So the way we gauge that is by looking at the value area, which is the blue shaded in part. That gives us a much better, because it's 70% of the trade. It's not just where the price is right now at this moment. It just gives us a better idea of what's happening in the market. So like right now, it's a terrible example to try to explain how value works because this is a fucking mess. But normally there's real consistency to it. Okay. So normally, again, it's been so fucking weird the last couple months. I'm not even going back far enough to have examples, but the idea is generally, so value is here. The next day value was higher. What did price do? It went higher, right? So the next day value was overlapping to higher. What did price do? It went higher, right? Value was higher. What did price do? It went higher. This is normally how the market works. So then the price pulls lower. The value area pulls lower the next day. What does price do? It moves lower, right? This is normally how the market works. But then when we start looking at the last few days or even the last couple of weeks, it's like a nightmare. It's really hard to read. But that's just because the market's in a tricky place right here. There's a lot of uncertainty. But normally there is consistency to it. So same thing here with the balance. If you have the value area almost completely overlapping the previous day, it's likely to lead to more balance, right? Which is what we got the next day. So that's the idea of trading value, not price. Price is just an advertising mechanism to try to trick you into doing business. You can trust value. Okay, so with adding all this extra volume up here, we just pulled the value area even higher. And the market is now trading inside the value area. Once again, normally at this point, I'd be saying, oh, we're back in value. That's going to increase the odds of a rotation to the POC. However, with the change in the market that happened here with the double distribution and these single prints that we've left behind, to me, it's more likely just further rotation up here at these prices. And I think we'll pull the POC up to where we are now. Probably not for another hour. On the question of trading SPY versus futures, it's to each their own. The SPY has less volatility than the futures. Obviously, if you're trading the underlying shares, like there's much less. I'm brain farting on it. Leverage. There's much less leverage in it. So the gains and the losses are much smaller. So it has a smaller emotional effect. I do agree that if you're not good at reading the market yet, if you're not good at understanding what the market's going to do next, I don't think options is a great place to start. I think it's better to first gain a market understanding, become very good at trading a market. Then you start to pile on new tools for trading that market, like options. So that being the case, what I would say is like pick either the futures, the ES, or the SPY, and then paper trade it, just the underlying shares. So if you're trading SPY, just buy and sell shares of SPY, go long, go short, that's it. Same thing with the futures. Just buy or sell futures, go long, go short, that's it. Once you've built up, you spent a couple months doing that where you're just killing it every day and you have a lot of confidence and you're like, okay, I'm a really good trader at trading the ES now. Then you start to learn about options and new strategies and different ways that you can take advantage of the skill that you already have of reading the market. That's just my opinion, though. I know there are people out there who learn options first. They learn how to trade options and then, how the options work, what with the Greeks and everything. And then they master a market. But I just think that's much harder to do. Thank you, Carl. I really appreciate the feedback, my man. The chart type, it's called a market profile chart. The software is from a company called Window Trader. AP Trades actually answered that question better than me. More clearly, yes. This one on the left is the market profile. These two are just regular candlesticks. Amen. Well, welcome, my friend. The TPO is your friend. Know it, love it, live it. I agree, Alex. These markets the last few weeks have had me sitting on my hands quite a bit. It's hard to get a good, solid trade. Tricky times. All right, so now the market's working its way down to test the base of those single prints. This is why I said earlier that you can't really call a double distribution until the end of the day, right? It's hard to call it in the middle of the day because this could always happen. My guess is we fill the single prints and then just more rotation around this area. I don't see this as a need to pull back further down. I just think if you look at the main area, let me get that drawing tool up here. If you look at all this area where all the volume traded yesterday, I just think we need to put in more volume today. Whoops, went way too far on that. Put more volume in here. Man, just work. Technology. Okay. Yeah, in this area. Right. Backfill some volume in here. Find some support. Then start working your way up again. Find some resistance. Then start working your way down again. Rob, that comment is basically just what goes on in my head all day, every day. It's just thinking to myself, what are these traders looking at? Why can't they see what they're doing? They're buying a poor high. Like I always have that exact thought. So funny. So we still have one single print left over that needs to be backfilled, but it all just feels like rotation. Kevin, I don't do options really at all. Occasionally, on a rare occasion, I'll take a swing trade with an option, but it's pretty rare. I'm mostly just a short-term day trader who trade. I don't swing trade. I don't hold trades for 2 or 3 days at a time. I generally get in and out of my trades within an hour or two, and I go flat at the end of every day. Rocket. Yeah, that's true. But I mean, the other idea is, and this is something I was discussing yesterday on the channel, is like the TPO chart on its own doesn't mean anything. It's exactly the same as looking at a candlestick chart. It's about putting in the work to master your ability to read it. And that's what I think a lot of these stonks only go up crowd are missing out on. Is like they happen to be buyers in the middle of a bubble, and so they're doing great. Buyers in the middle of a bubble always do great. That's what a bubble is. But they're not learning the underlying fundamentals so that when the bubble pops, they'll know what to do. And that's what scares me about the stonks only go up crowd is sooner or later, the money printer is going to stop going burr and reality is going to set in, and then they're not going to know how to handle it because they haven't spent any time putting in the work. So, but solid joke nonetheless. Alex, yes, it does. Right. As I mentioned, the value area doing whatever it's doing is giving you an idea of what the overall value of the price of the market is doing. So if the value area is moving higher very slowly throughout the day, the value of the market is moving higher throughout the day. If the value of the market is getting more and more valuable, it's a fair assumption that price will push its way back up, right? Remember, price is an advertising mechanism. So if this is a good value to do business, then nobody's going to want to sell here. So the price has to push higher to bring in sellers, right? To entice them to do business. So yeah, I think the more value moves higher, the more strength this day has for moving forward into the days to come. I do expect by the end of the day, value will be overlapping to higher. And I do expect the POC will be probably up around the 40, 45 level somewhere. Obviously, it's too early to say, but that's just my guess. Shit, and I love it. Yeah, he'll make the money printer go burr just at me. He'll be like, "What'd you say, Charles? Burr, burr to you. What's that? They're saying something bearish on CNBC. Burr, burr to them." Okay, so there's the POC getting pulled higher here in the I period. Okay, we still have that one single print in the E period that is left behind here, which could still mean a double distribution day. We won't know until the end of the day. If that's the case, the second day here is just rotational. So we can look for a breakout of that rotation when they repair the poor high, the same way we would as if none of this below us had even happened. We can look at it like the day opened, it rotated, and then it broke out one direction or the other. Okay? Obviously, pulling the POC up here is very bullish. This is now a fair price to do business. We also pulled the value area to overlapping to higher than yesterday, which is neutral to bullish. So all good things. Yeah, Chris, the green line is the POC, the point of control. Okay, so we just filled that last single print, clearing out that base of single prints. Okay, little downside rotation here. Let's see if the NASDAQ finds support on their 20 moving average. If they don't, if they break through, that could pull the ES down to its 20 moving average. As far as support, I don't think we're going to have another huge sell-off. I think the market is accepting higher prices. Look at how much we've pulled up the value area, right? Just a few hours ago. Come on. There we go. Just a few hours ago, the value area was down here, right? We've already pulled it all the way up here. That to me is acceptance of these higher prices. So this is just rotation, and this is just a downward rotation. So I'm looking for support somewhere in here. Absolute worst case scenario is the halfback at 41.59, but looking for support and then a rotation back to the POC. Also, it looks like that halfback would line up pretty well with the 20 moving average. So if the 20 on the NASDAQ can't hold and that breaks and leads to further downside continuation in the ES, I expect we find support on our 20 there or the halfback. Also at that same, around that same level, you got some confluence here. You got a node of volume from yesterday. You got a node of volume for overnight, and you're just below the prominent POC from overnight. So that makes this very strong support in my mind. Anywhere between the opening price of today at 41.62 and the halfback at 41.60. What's that I see? A weak J-Lo. Weak J-Lo. It looks like I'm about to lose the stream again. I'm getting a warning. So if we do get cut off here, just go back to the Pirate Traders page, wait a minute or two, and I will start streaming again. Thank you, Trading Donkey. It would probably have to be a lot of donations because the problem is the spot in the apartment where the hookup for the Wi-Fi, like for the internet, is like in the living room all the way at the other end, and then my little office is in the back of the apartment. And so the only way to do a hard wire would be to physically run a wire, and there's just no way my girlfriend's going to let that happen. Just like design wise. So any donations to make that happen, it will have to be big enough to entice her to let me have a wire running through the entire apartment. So I don't think that one's going to work out. But feel free to donate. Smash that like, send me some cash, you know? I'll do what I can. I don't know what that is, but I'm Googling it now. Thanks for the heads up. Literally, the only thing that my girlfriend understands about what I do is that I talk to some guy named Fausto a lot. Like that's all she's picked up from this. Is I like to talk to a guy named Fausto about poor references. That's about all she understands. AMKY, you are my friend. We're sharing it right now. I mean, you don't get it quite as conveniently as I do. You can't make any adjustments or changes or mark it how you want to mark it. And it's always going to be like 10 seconds delayed. But other than that, dude, a huge thank you to Trading Donkey. These power line adapters look sick. I'm definitely going to get one and try it. Thank you so much, brother. Rocket, I totally agree. Oh no, the POC just got pulled down. Dump, da, dump, dump, down. So now this rotate back up is not correct. Okay. Yeah, I mean, to me now, this is becoming a don't touch this market. A like just let it do its thing and sit by because it is getting a little difficult here. It's still obviously rotational, but the question is, does it want to rotate down to like the opening price and put in some volume down here to get that nice bell-shaped curve for the day? Or will, all of this push higher maintain? So again, we find support around the 20, we find support around the POC from overnight, around the halfback from today. It's tough to tell which is more likely here. Joshua, you need to just change the name of your YouTube account to You Know Me. But good day, brother. Kathy, I trade as much as the market gives me opportunities. Some days I take one trade, some days I take 50. It just depends. Depends what's happening and what's going on with me. There's no exactness to how I do anything. There's no one answer. Everything is always based on whatever information I'm getting at that particular moment. Oh, damn. I was looking over the other screen. It just must have sold off and tagged that halfback. So, again, this was where my arrow was just at down here. Right? Perfectly found support there. Now we're rotating back to the POC. Further grind, further rotation. Does look like they're trying to start putting some volume in right here. Give us that bell shape. On the question of wouldn't it be fair to say the buying is weak here? Well, let's take a look at the internals. Yeah, we're starting to get down to the 1,000 mark there, which is a sign that there's a lot more sellers than buyers here in the ticks. Excuse me. The other internals, geez, I haven't even looked. They've gone straight bearish on us here. So yeah. But to me, the POC getting pulled back down, this is what I was talking about earlier, is just a sign that the market wants to make this into a bell-shaped curve with the volume here, right? You got a big-ass node of volume up here and a big-ass node down here. So just for drawing purposes, because I'm such an amazing artist and I just love to show it off. Right now, this is the shape of the market. What the market wants to be shaped like is this. So it needs to put a lot more volume here to push this area where there's very little volume. It needs to put in more in order to get that nice bell-shaped curve. So they pull the POC down and then they spend the time rotating around here, right? To put in that volume. So I don't see this as particularly bearish. Just a regular part of the rotation. It just so happens to be a rotational day with an enormous fucking range. But it's par for the course. So where do I think the market finds support to the downside? Well, obviously, as we've been discussing, the halfback is the first place to find support. This little node of volume around 54 could be support on a pull down. Get just below value here. Remember, on a rotational day, I like to go long below value for rotation back to the POC. Haven't had a chance all day long. Still got that weak D period low down here. So in a worst case scenario, market might need to trade its way down here, repair that weak reference, then rotate back up. Yeah, so those are the major supports that I see here. If the market trades past the halfback, would be this node of volume at 54, and then this node of volume that starts at about 48 to the repair at 45, somewhere in there. This is one of those slow to fast. Somebody yesterday was asking about the difference between the slower moving internals and the faster ones. So like both of the slower internals here on the top are still pointing down, right? But the ticks are starting a trend higher. We've got higher lows in the last two ticks here on the NYSE. So that could be the beginning of the push back up to the POC. And yet, well, this one's now starting to turn green, but these are still bearish looking, right? So you first see the new trend in the ticks, then it shows up in the other two. Okay. Create a weak K period low here. So 2 weak references below, 1 poor high above at the POC on a rotational day. All right. Well, thank you for stopping by. Enjoy that second vaccination shot. When I got mine, I got nothing but a headache, by the way, if you're worried. Just had a sore arm and a headache for like a day, and then I was fine. Welcome to Pirate Traders Medical Talk. Taxley, it is currently finding support on the halfback. Pretty common. Once again, if it needs to push through that level, the next is this little node of volume just below value here. It's around 41.54. Okay, tick starting to build higher here. But you guys see how the market's doing what I was talking about? It's starting to turn all these candles pink and red. All right, slowly but surely, it's working its way through all those little white spots and making them pink and red. It's just building volume here. The market loves a bell-shaped curve. I mean, it's not just the market. In the universe, you find bell-shaped curves and everything. No doubt, Donkey. No doubt. It's frustrating, man. It's not just it's the amount of volatility. It's not just the fact that the market is chopping. Whoops. Um, the market's in rotation. Chop is what it does. It's the amount of volatility that's driving me nuts. It could only be computers that are doing this. Please, somebody explain to me what human being was buying up here but wouldn't buy down here, that we had to rotate all the way down to here. You know what I mean? What human being was selling up here who stopped selling down here? Like it's all just the ranges, the distance that the market is moving with each one of these moves. It just doesn't feel like human beings making decisions. It feels like computers that are just programmed to do this, to look for these references and then trade the opposite. It's also the tempo. It's like when we move to a new area where two-sided trade takes place, the tempo comes to a complete halt. And it just slowly kind of grinds and bounces around. And then out of nowhere, boom, it drops to a totally different place where two-sided trade can take place. And then boom, it pops right back up. So I really think that there are just new algorithms out there that are programmed to do this, to give us this chop. I mean, I've been trading this market, watching Market Profile every single trading day for the last year. Okay. And what I've seen over the last month, I've never seen before, and it makes no logical sense. So there's something happening out there. There is a change in the fundamental way things are happening. And my guess, if I had to I have no idea. I'm just pulling this out of my little butthole. I think it's computers. I think it's algorithms that have been designed basically to eat the lunch of human beings, because it's just too bizarre, this behavior. But that's my rant. Rant done. I mean, sorry, rant not done. Just look at this over here. Okay? We were doing business down here. We broke out of the balance area. Should have got continued excess higher. If we wanted to do business up here, why the fuck did we have to pull all the way back down to here and then push up to here and then pull all the way back down to here? If we spent all this time balancing here, accepting this excess, why did we have to pull back down to here? It's just like, who's doing this? Who are these people that are making these decisions? Probably not people. Well, that is the one nice thing, Salmon River, about the algos is that they have to be programmed, right? And the programming has to give them very, very specific guidelines. And those specific guidelines will give us very specific references where it will bounce up and down. But it's really, I mean, over the last month, I've been thinking more and more about myself and my own style of trading and feeling like I might need to switch to being a swing trader and just switch to taking trades over, a few days to a few weeks, because all of this intraday chop, and it's not the chop, it's the amount of volatility of the chop. It's like you can't be wrong and just lose a little bit. You're wrong and you get eaten alive. So it is frustrating me a little bit. Without a doubt. Okay, so once again, we're just still backfilling the volume right here in the middle of the range. Trying to get that nice bell-shaped curve. Thank you, Philip. We'll see you next time. Oh, Rob, yeah, it's definitely not one button pusher. I don't believe that for a second. I think it's probably a lot of algorithms from a lot of different institutions all over the world. And they're all just programmed very similarly, to function very similarly. And I think they're... Oh, sorry, someone at the door. No, Jamie, not getting rated. Can you imagine if Bill Gates was so upset about his divorce that he started going after little YouTubers out of anger and frustration? Yep, so just more chop here, more building of volume in the center of the range. No new information. The M period is upon us. Do, 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 do. Okay, so what do we think is going to happen here in the M period? Do we see a push higher to repair the poor high and try to break out here at the end of the day with a spike? Do we see a rotation back to the POC? Do we see a grind in one spot? Do we see a random liquidation break that brings us down below value? Hit me in the chat. Let me know what you think. Okay, Design Knob is seeing 41.84. He's seeing a push higher, a spike. Taxley is hoping for the repair of the poor high. News Blip seeing 41.60. Okay, pull back down below the POC. Actually down to the halfback. Torkov is feeling bullish to 41.80. Okay, just getting a little bit above that poor high. AP Trades also seeing that repair of the poor high, getting us up there to the 80 mark. But the question is, when it gets there, what does it do, right? It repairs the poor high, gets 2 ticks above the E period here. It actually looks like it'd have to get 3 ticks because then it would just be poor because it's right next to yesterday's high. So it would need to get essentially 2 ticks above the 5.5 high. So it'd have to get to like 80.25, 80.50 area. So let's say it gets up there. It gets that repair. Does that bring in more buyers who start to pile on here? Okay. Or does that give us the excess we needed to the upside to begin the rotation back down? We'll just have to wait and see. Got to see what they give us. John seeing 63. Donkey seeing 77, right about where we just were. $90 people watching. Any other predictions? Anybody want to take a guess? We will not hold it against you if you're wrong. Okay, Lewis is seeing. Sorry, I didn't know if my mic was on. Lewis is seeing 49 or 41.79. Okay, just getting right up to the high of that value. Pascal 41.90. Bursting through that poor high and then getting a quick spike higher. Very possible. Chris is seeing 4,200, so a very real spike higher. Okay, so AP Trades is seeing that once we get that excess, we get the pullback the pullback right down into value. John just sees it's the algos. I'm sorry. I hope I didn't poison the well. Come on down. That's not the Bob Barker voice. Jesus, I just failed. Okay, Joe's seeing a rug pull and a drop back down to the POC. Here we go. They're heading to that poor high. Okay, the internals are trending higher here. To me, this looks like it's going to have a spike higher. Okay, so that's the repair of the poor high. So now the question is, does this bring in new buyers here who are excited for a breakout? We'll see the volume start to build up in this area. Okay. Or was this the excess that those sellers who got themselves in a poor position earlier needed to get out of their trade, so now the market can rotate back down? Yeah, there's nothing wrong with that, John. I don't ever take trades in the M period. It's too emotional. Even if you're right, by the time you get your profits, you've exhausted yourself mentally. Ah. Oh, was it because you could hear me breathing on the mic? Is that why you said call the medics? I didn't realize I had my mic on that whole time. Did you hear me huff and puff? Because I tried to buy one of those routers on Best Buy and I had to put in my credit card like 3 times. It was driving me crazy. Here they go. Murder algo right at 1250. Whoever was the first person to point that out, Jesus Christ, thank you. It's amazing how it triggers right at the 1250 mark. One could almost just like open a ES chart and go long with one contract, then open an MES chart, go short with 10 MES contracts, let the murder algo start, and then whichever direction it's going, just close the other trade and let that fucker take off. I mean, it's just insane the volatility it brings in. Murder algo, murdering everyone stops. I screamed? Oh boy. Who knows, man? I think out loud sometimes, so you may have heard me mumbling to myself. I may have sounded like I should be in a nursing home. These things happen. Murder algo is like, what's that, guys? You're starting to FOMO into this? Dropping it 10 points instantaneously. Fuck you. Okay, so let's take a step back, as we've only got 7 minutes left in the day, and start to figure out what this could mean moving forward. Obviously, pretty bullish, right? Come on, data. Okay, so we were stuck all last week in this balancing area. Okay, we looked above it, failed, pulled back down to the opposite end of balance. The next day we tried again, or the overnight tried. It failed in the regular trading hours, and then we pulled all the way back down. In that overnight, broke through the opposite end of balance. Okay, so that brought in the fear and the panic that caused a major sell-off on the 4th. Okay, that sell-off repaired a bunch of poor and weak references that were below, found a good low, and then built its way back up on more weak references. Okay, these three from the 4th. Then the market spent 2 nights and 1 day yesterday balancing off that excess from that pull down. Then today, we went back down into that range, tested it. So remember, when you have excess, there's 2 different ways to balance off the excess. You can do it with time or price. First, we tried to do it with time. The overnight, yesterday's trade, and then last night's overnight tried to balance off this pull lower with time, but instead the market was like, nope, we got to check it with price. So price pulled down. It found support right at the POC from yesterday, right in the node of volume where most of the trading took place. I'm sorry, from the 4th, where most of the trading took place. And then we began to rotate back up. Okay, so then we rotated during the day today inside the exact same range where we were looking for balance over the last 2 nights and yesterday. Do you guys see that? How the value area today is literally just engulfing the previous day and the 2 nights, right? And so now this spike higher at the end of the day, this is the breakout from this balance. So the idea being that this is the balance that bounces off the excess to the downside. And now we've begun with this spike, with the base of this spike here at 41.80. We've begun a new auction to the upside. Okay, so where is that auction taking us? Where are we going to end the day today in terms of this new spike higher? Well, we're up at the upper ends of balance, right? This is the area where we failed twice, 3 times last week, 4 times. So what will happen when we get there now? That will be what we decide tomorrow. Okay, so the first thing we'll be looking at come tomorrow morning is the spike rules. What the spike rules tell us is if tomorrow, if the trade opens within the spike, so within this area here, that is neutral. It's neither good nor bad. It's just neutral. So that's that. If we open below the spike, so if we open inside this range down here, that is bearish. And that is bearish, meaning the market probably needs to come back down and test these lows again, right? That this didn't work. This failed. And we need to get back down there and test those lows. If the market opens tomorrow and it's above the spike, so it's higher than the prices where we went today, we have a gap higher, that is very bullish. Okay, so that's what we'll be watching come tomorrow morning. We did leave another weak reference behind today. So this is one of those things. You guys hear me talk about it all the time. The more and more of these that stack up, I'm going to ignore them now. Okay? We had our chance to balance in this range. We did it all day long, and now we broke out. So I'm going to trust this breakout. I'm going to trust the base of this spike. And I'm going to ignore these weak references in the meantime. But if the market tomorrow morning opens below the spike, or it trades below the spike tomorrow, then these will come back into view and they'll become a target. Man, they're going to push it right till the last second. And then as soon as the bell rings and the end period starts, it's just going to go bloop, and it's going to pull right back down. These silly algorithms. Okay, there's the closing bell. Here's the end period. Let's see if it instantly falls right back down. Oh, I guess not. Give it a minute. It will. Okay, so spike rules in play for tomorrow. It's a very big spike. Anyone that called 4190 or 4200 was a pretty good call here today. Didn't quite make it there, but that was great. Thank you guys so much for joining me. Another one bites the dust. I look forward to seeing you all here tomorrow morning. Please hit that like button on your way out the door. I'd really appreciate it. Thanks a lot. Have a great day.